Alright, so in this video, I wanted to give a weekly update of my portfolio with Questrade. So as of January 22nd, I'm sitting at 113,790. And if you notice something here, cash is a little bit too high. I only have 30K invested and 83 just sitting there not doing anything. And obviously with all the US dollars that were printed, it's not a good idea to hold too much cash. You want to sort of invest it so that you can fight inflation and so your cash doesn't lose value. But sadly, I'm not too sure what to invest in. So I'm just going to go over my portfolio, talk about the trades that I currently have open. So right off the bat, I have 4 accounts with Questrade. I've got margin account, TFSA, RRSP, and RESP. And notice Questrade now has this new little green help button, explain this page. If we click on it, let's just see what happens. Understanding your account balances. Okay, it looks like it's just explaining explaining the page. All right, so I'm going to start with my margin account. Let's go straight to positions. All right, so positions, I've got 2 put spreads and 2 naked puts. So the put spread I have is on Adobe. It expires February 19. So this is a put credit spread. It's an options trade. I win on this trade as long as Adobe stays above 465 come February 19. Anywhere above 465, I win on this trade. I think I collected a total of $1.40, so $140 credit. Adobe did drop below 465 this week, but it did come back up. If I search for it right now, I think it closed at 470, 472. Okay, that's good. Hopefully by February 19, it stays above 465. And I've got Baba here. That's hilarious. Got a put spread at 255, 250. Put credit spread. So once again, I win on this trade as long as Baba stays anywhere above 255. 255 come February 19. Baba dropped all the way down to 212 at some point, but recovered when Jack Ma appeared out of nowhere. And the stock went to 270 almost. I think it closed at 260 this week, but all I want is for Baba to stay, see it close at 258. I just need it to stay above 255 come February 19, and if it doesn't, I think I'm gonna roll it as a naked put. So I'm gonna buy back I'm gonna sell the 250 put that I had initially bought. So I'm gonna sell it, and then I'm gonna keep the short put, but I'm going to roll it to a lower strike and for a credit, hopefully. And then I've got 2 naked puts. I've got Corsair at 35 strike for February 19. So they're all February 19 expiries. That's cool. So Corsair, February 19, 35 put, collected $3.50. So this is an options trade as well. And I basically win on this trade as long as Corsair stays above 35 come February 19. My break even is 35 minus the premium that I collected. So this is a put option that I sold. I collect a credit of $3.50 came into my account times 100 because I only did 1 contract. So that's $350 come into my account, and I get to keep it as long as it stays above 35 come February 19. But most likely what's going to happen is as time goes by and if Corsair goes up, the value of this put option drops. So if it drops to maybe $2 or maybe $1.75, I'm going to buy it back. And then this way I'm closing the trade and I'm confirming the profit. My profit will be the $3.50 that I collected minus the $1.75 that I paid to close the trade. And I've got finally HIM's put at 15 strike. I mean, it was too cheap. There isn't that much risk, and it's considered a growth stock, so it seems like a safe trade. I collected $1.25 for it, but the put option actually increased in value because the stock dropped a little bit. So right now it's worth $1.49. So I'm actually losing. It's an unrealized loss on this put option. But if we look up HIMS to see where it's trading at 15.20. Yeah, so that's not good. My short strike is 15, but if anything happens, I'm just gonna roll it. No concerns. Corsair, I think, is also trading pretty close to the strike. My strike is 35. Actually, it went up to 38. So yeah, this one should be good. I should be able to close it soon. Hopefully next week I can close it. So that's all I have in my margin account. And if I look at my balances, I've got 0 in Canadian and I have 77 US cash. That's all I have in my margin. And basically I'm trading off my TFSA equity. So you can see that my maintenance excess, my margin is 4,900, but My TFSA maintenance excess is 36,000 or 43 US combined. And that's what I'm trading off. That's how I'm able to trade in my margin account. It's based on my TFSA's equity. So I can make trades that require more capital than the actual cash I have in my margin account. That's the whole idea. So now if I go to my TFSA, so as you can see, I've got 11,000 invested in Canadian, but I've got 2,000 Canadian cash. And then so as you can see, I've got 9,000 invested in Canadian and then 2,000 cash and only 5,000 invested in US, but 32,000 cash. So this is the bulk of my cash that's not being used right now, which I should be using, but I just don't know what to buy. So currently, what I have in my TFSA, I had to buy BABA. I mean, it had a 52-week high, I think, of 319. Actually, let's go check right now. 52-week high. 52-week high is 319.32. So when it dropped, look at this. When it dropped here all the way down to 212, I had to buy it. I bought some, I think, at 225. And if you look at March price, the March price was around actually we can see the 52-week low was 170. So when it reached 222 or 212, I felt like it was a good opportunity to get into the trade, to get into the stock. So I bought it at 225. I bought 5 shares. I basically put in $1,000. The other thing I'm trying to do in my registered accounts, I'm hesitating between covered calls or just buying stocks that dip. So any good opportunities in stocks, then I'll just put in $1,000 purchases. So $1,000 at a time, not more, just in case the stock continues to drop, just in case something else comes up. So that's what I plan on doing in my registered accounts. I'm not too sure yet. As opposed to doing covered calls, because when I do covered calls, I need to buy 100 shares, and sometimes it takes up a lot of capital. And if it doesn't go well, then it's a lot of capital held up not doing anything. But at least if I just throw in $1,000 at a time in stocks that I think are good opportunities, then the overall portfolio has a better opportunity of growing. All right, so I've got BABA in my TFSA up $166, so I'm up 16% already. In fact, I think I should put the P&L. Let me add the P&L. So is it the open P&L or is it just percentage P&L? I think it's going to be percentage P&L. So yeah, let's add percentage P&L and let's move it closer to the profit, to the open P&L. Sorry, I brought it back down. So there we go. So now I've got quantity, average price, open P&L, percentage, days to expiry. Obviously days to expiry will be for my options, and date and time. Okay, so I'm up 14% on BABA right now. So let me just go back to then I've got Bell, which I bought for dividends. I'm down 1%. I've got Bank of Nova Scotia. I'm up 26%. So that's what I mean by just throwing in $1,000 in each stock every time I see a good opportunity. So I'm up 26% on that, $277. I'm up Choice Properties. I'm flat. Gold down 3%. Stupid Gold. Manulife. I'm up 28%. That's probably my highest return in my TFSA, 28% on Manulife. MMP, I'm up 23%. Realty Income, 1%. Pizza, I'm up 8%. Didn't expect that from Pizza actually. Ryokan, I'm up 25% or 26%. Smart Centers, I'm only up 4%. AT&T up 2%, and TD finally I'm up 17%. So all of these stocks, mostly they're all for dividends except for BABA and Gold, but the rest are all for dividends, and on average they're yielding 7% per year. And from these positions, actually, I'm getting about $70 Canadian per month. So that's the dividend income right now currently that I'm getting from these dividend positions. And the thing about dividends is that it's completely passive. So now in my RRSP, now it's all covered calls. I've got 5 covered call positions, but they're all pretty cheap. I mean, not more than $20, so not spending more than $2,000 on these. So Box, I've got a strike at 18, and most of them are expiring February 19, except for Virgin Galactic. It expires April 16. So I've got Box at an 18 strike. I've got Rocket at a 22 strike. So Rocket I've had for a while now. I just keep rolling the call and collecting more credit, as long as it stays within my initial cost of 21.6. So my strike is 22, My purchase is 21.6, but I've been collecting credits for a while now, and as you can see, it's trading around 20. So that's the ideal scenario. When the stock doesn't do anything, it's flat for a while, and you just keep collecting premiums. That's perfect. But it doesn't happen all the time. Sometimes the stock just flies, so then you lose your shares. And sometimes the stock drops 30% and you're stuck holding the stock that's down 30%, and you can't even sell calls on it anymore because there's not enough premiums at the original strike price. And then I've got Root here at 17.5. Stock went up, but I don't think I was able to close the trade yet. So I bought it for 18.37. The stock went to 19.59. So I'm up $122, but I'm down $24 on the call that I sold, which makes sense, of course. So if I close this trade together, I'd be making $98 net profit on this trade if I close it all together right now. So my initial entry, as you can see, for the stock is 18.37 minus 2.77, because I bought the stock at 18.37 and then I sold a call option at 2.77. So I only paid 15.6 to get into this trade. But right now I could sell the stock for 19.59, but I have to buy back the call option for 3.01. So that means I would collect 16.58. And if you deduct 15.6, which was my net debit, then that's how I get my $98 profit on this stock, on this position as a whole. And then I've got Virgin Galactic here, expires April 16, bought the stock at 23.6, it flew to 34. So this is a scenario where if I had just bought the stock, I'm better off. But obviously I don't know that, so when I bought it, my goal was just to collect premiums as much as possible. Can't complain because I collected a lot of premiums from it. Come April 16, most likely, it depends where Virgin Galactic is. If it comes back down to 23, that's good. I'll be able to sell calls again. If it doesn't, then I'll just close the whole position entirely and get my capital back and then look for something else. And Stick, I just got into this trade, bought it at 14.4, stocks at 14.6, so didn't move much. And I sold a call option at a 15 strike, collected $1.27. And then finally in my RESP, I've got another covered call on Corsair. So because registered accounts, you can't sell puts, so I did a covered call. And this was to replace Intel. If you remember my Intel position, I got rid of it before earnings this week. Took a 60-cent loss on it, or $60. But I wanted to get rid of it in case Intel dropped another 10% like it did the past two earnings. So I got rid of Intel. But now I've got Corsair. I went with a 30 strike. So the stock's trading at 38. So I bought the stock at 35. And I sold the call option at a 30 strike for February 19 for $7.44. So my entry is about $18. In fact, if I go to orders executed, you could see my entry here is 28.52. But my max selling price is 30 because that's the strike that I sold the call option at by February 19. But as the stock goes up, I can close this trade earlier and keep my profit, or I can even roll the call option, try to collect more premium, and then look for something else. But if the stock stays in my range here at 30, then it's perfect. I could keep selling call options. But the reason I got into this trade is because I got out of Intel and I just wanted a trade that would allow me to recover the loss quickly. And I thought this would be a good one, because if Corsair stays above 30, then I make $140 quickly. So right now, where does it stand? So I got in at, we said 28.52. I could actually sell the shares at 38.38, but I have to buy back the call option at 9.7. So right now, it's not much profit. I would only get $10, so I'm not ready to be closed yet. But as time goes by, the time value in this call option decreases. So then I'll be able to close this entire trade to something closer to 30, and therefore making my expected profit. So yeah, that was my portfolio update. If you have any questions, any comments, any suggestions of what to invest in, leave in the comment section below. And like always, if you can open an account with Questrade to trade on the stock market or invest on the stock market, use my referral link below to get $50 in free commissions. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.